Welcome to Doctor's Academy for Accounting and Taxation. In this video, let us discuss the accounting equation and double entry principles and rules. What is accounting equation? Accounting equation is asset is equal to equities. Accounting equation is asset is equal to equities. What is asset? Assets are economic resources owned by any organization which is having a realizable value. Then what is equities? Equity means the total owings. Equity stands for the total owings. It may be owner's equity or creditor's equity, or we can classify the equity into two compartments, that is owner's equity and outsider's equity. Owner's equity is nothing but just capital and the contribution made by the owners to establish, to start the business. And outsider's equity means loans, borrowings, creditors, etc. Therefore, if we expand the equation, we can see this way: asset is equal to equity, or asset is equal to owner's equity and outsider's equity, or asset is equal to capital plus liabilities. Outsider's equity is otherwise said to be liabilities. So asset is equal to capital plus liability, or capital is equal to asset minus liabilities, or liability is equal to asset minus capital. So this equation, based on this equation, the whole accounting principle double entry rule stands. Now let us see the rules of accounting equation. Regarding assets, increase in an asset shows debit. Increase in an asset to be debited, that will show debit. Similarly, decrease in an asset to be credited. Similarly, regarding liability, increase in liability to be credited, or credit, it will be showing credit. Similarly, decrease in liability, debit. And regarding capital, it is another liability, type of liability, but it is internal source, that to be, if it is increase in capital, credit, and decrease in capital, debit. Similarly, increase in expenses or loss, increase in expenses or loss, debit. Decrease in expense or loss, credit. Similarly, increase in income or profit, credit. And decrease in income or profit, decrease. So that to be debited. This is the basic rules regarding the accounting equation. These debit and credit will make impact on asset is equal to equities, our accounting equation. Based on this accounting equation, the double entry rule has set up. Let us see what is the golden rule of double entry. In double entry, or for the administration of double entry, or as per double entry, the whole transactions and accounts are classified into three categories. Category 1 is personal account, second is real account, and the third one is nominal account. Double entry rule stands for two entry, which means there are two aspects, that is debit aspect and credit aspect. As I told you, based on double entry system, the whole transactions are broadly classified into three sets, that is personal account, real account and nominal account. For dealing with each type of account, there are certain rules that adopted according to the double entry system. For personal account, the first rule is debit the receiver and credit the giver. First rule is this: debit the receiver and credit the giver. If something is received from the business by someone, debit it. And someone is giving something to the business, credit him if it is a personal nature transaction. Secondly, the real account. Real account is an account which deals with assets. So the rule is debit what comes in and credit what goes out. If something comes to the business, it to be debited. If something goes out of the business, from the business, to be credited. So the rule is debit what comes in and credit what goes out. This is for a real account. And for the nominal account is nothing but an account deals with income and expenditure. Debit all expenses and losses and credit all incomes and gains. So my dear friends, I would say that there are three rules which pertains to personal account, real account and nominal account. Let me repeat that once again. For personal account, debit the receiver and credit the giver. For real account, debit what comes in and credit what goes out. And the third one is nominal account, debit all expenses and losses and credit all incomes and gain. For every transaction, there will be minimum two elements, two aspects. So such is known as debit aspects and credit aspect. For every transaction, there will be two aspects. Hope this concept is clear. Please like it, subscribe it and share it if it is useful. Thank you very much.